Market conditions continue to be bullish in this bull market. We're seeing this bull market rank of 14 to the upside on S&P 500, and we are seeing those averages expanding, as we've talked about before, the expansion of that current trend as it is moving higher. Eventually, it gets to a point where those averages are fanned out enough that it creates some supply side selling to the upside of this range versus a compression here. It's a little bit tighter. So we'll be watching that to see if we get any weakness. So far, that S&P 500 is holding up well, at least on the price pattern. The internals of the S&P with the number of stocks above their 50-day moving average weakening significantly down back under 50. And you're seeing also getting lower highs right here. So here we have this series of higher lows and higher highs, and now we're starting to see lower highs and lower lows than here. So we'll watch to see if that breaks down. That could be an indication of additional selling where we've got a handful of stocks pulling the S&P 500 higher, but the bulk are starting to have some distribution during these rallies. Keep an eye on that. That could be some internal weakness to be aware of. We haven't seen a spike in volatility quite yet. But we're getting some of that expansion again, that fanning to the downside. The VIX is an odd chart as well to track and to watch because it can do this. It can have these real big high swings. But in terms of the overall range, we want to be opposite of what the market is. Right now we're 14 to the upside, we're 14 to the downside. If we jump over and take a look at some of the other indices, we've got the NASDAQ, which has had a nice run the other day, and looks like pre-market is also looking to trade higher, going to gap higher this morning. Dow Jones Industrial Average showing some weakness here at 12. It's got two down, two to the bear side, and you're seeing some weakness here, some support levels that could be taken out around that 440 range. If we scroll through, let's look at bonds. Bonds are compressing right here on the short end of that yield curve, but it is bearish still, that downtrend in bonds. TLT is continuing that downtrend here as well, now with a new notch back into bearish momentum to the downside, and those averages compressing right here. Remember that when we get this compression of trend, compression here, we're looking at these compression areas as locations for decision making or an advancement of the trend, and then the width of these as they get wide like this, an area where we could see some topping patterns or some bottoming patterns. So we're back to that area now where we've had this downtrend, and now we're curling back up again, running into some resistance. And so this could be the trend for bonds right here, which is not necessarily a good thing because we want to see interest rates moving higher. With a downtrend in bonds, interest rates are still moving higher, flat to higher at these levels. Let's jump over. We're seeing some continued weakness in sectors. Let's look at those. There are some obviously that are holding up here. Technology still holding up nicely. We're seeing consumer discretionary holding up nicely. And we're seeing a few of these others that are starting to move lower. The industrial, similar to the Dow pattern that we just looked at. Energy, we're seeing weakness here, 13 to the downside. I'm just looking at this number right here. And we're seeing financials holding up. Real estate starting to weaken here a little bit with 8 to the downside, 8 to 6 to that downside. So we're sitting right at a support level on real estate, which is interest rate sensitive. And we're seeing, as bonds pull back and interest rates move up, we're seeing some sensitivity there in real estate. Utilities showing some weakness also, a little bit more weakness in basic materials as those are in this downtrend, everything to the downside right here, and continue this acceleration to the downside. We're also seeing consumer staples with some weakness, and transportation, just about 6, so they say, but we're 8 to the upside, 6 to the downside. And the weakest of them all so far is healthcare. We're seeing that downtrend and continuing to see some retracement happening here. If we jump over to commodities, we've got USO, which is trying to gain some strength right here with a new uptrend, and potential bottoming out here on gold or on USO. Gold also strong here, having this retracement and pulling back and now moving back up into this bullish buy zone, a little bit of compression here at the top end of those averages. And so we've got this corrective counter trend move. As that was happening here, we could see this tightening and then expansion for some continuation in gold, particularly if the equity markets start to get tired right here. We could see a move back into oil and back into gold. SLV, silver, 7 and 7 on that trend. A couple stocks to consider for today. SLM, which has got a nice confirmation bar, increasing volume, and back up above that 236 location on symbol is SLM. The other is AGYS, which is AGYS. I'm not entirely sure how to say that, but we've got a nice confirmation move here as well. A couple of ideas for you to consider today. That'll do it for today's update. Everyone have a fantastic day today.